Now, first things first, just checking to see if there's any spiders. No spiders. We're off to a good start. G'day everyone, thanks for joining us this afternoon, and thanks to everyone who might be watching online, including all of our Facebook friends. Today's budget update is good news for Queensland. It's the dividend for the hard work and commitment of 5 million Queenslanders over 2 years of the pandemic. It is a testament to the strength and fortitude of our people through the most trying of times. Importantly, it provides us with the fiscal headroom, the fiscal buffers for what challenges our state might face next. And Queenslanders know whether that is a flood or a fire, a cyclone or a drought, or maybe even another variant of COVID-19, Queenslanders know that our state always faces challenges. But Queenslanders are always up for that challenge. They always lean into that challenge. And so Queenslanders know what they have to do. We get ready and then we do whatever we have to do to get through. So our message to Queenslanders today is very clear. Our government is with you every step of the way. As the world attempts to emerge from the pandemic, the virus is making its way to Queensland. But Queensland is in a healthier and in an economically stronger position than almost anywhere else in the world. And our leadership position has been reinforced again this morning with the ABS labour force data that has been released. There are now 100,400 Queenslanders in jobs, 100,400 Queenslanders in jobs than there were before the pandemic started, before COVID arrived. We have recovered more jobs than any other state. In fact, we have recovered more jobs than every other state combined. Queensland accounts for 20% of Australia's population, but we have delivered 56% of jobs recovered for the nation. Queensland's unemployment rate has also fallen. It's fallen to 4.8%, which is the lowest unemployment rate in Queensland for almost 13 years. The data released today is the first time since their lockdowns in the middle of the year that New South Wales and Victoria have resurfaced into positive territory when it comes to jobs creation. Queensland has been continuously in positive job creation now for more than 12 months. As COVID comes into Queensland, over 80% of Queenslanders over 16 are fully vaccinated. In New South Wales, just 4% of the population was vaccinated when their major outbreak took hold in the middle of the year. And we know the devastating impact major outbreaks had on the population and economies of New South Wales and Victoria. The budget deficits for New South Wales and for Victoria for the current financial year are each in the vicinity of $20 billion. That's why I'm pleased to announce today that Queensland's budget deficit for this financial year is now forecast to be just under $1.5 billion. This is less than a tenth of the budget deficits in both New South Wales and Victoria. Our deficit of just under $1.5 billion is a reduction of around $2 billion from the $3.5 billion budget deficit we forecast in June this year. That means our budget deficit for this financial year is forecast to be less than half the budget deficit we thought it would be in June. That deficit reduction is driven by two key revenue sources. First, an increase in coal prices, and second, an increase in stamp duty receipts flowing from a larger volume of residential transactions and higher property values. State taxes and royalties are now forecast to increase by $8.1 billion over the next 4 years relative to this year's budget projections. While part of this revenue has reduced our deficits, we're also making prudent allocations for this additional revenue. First, $2.1 billion has been set aside to support our future response to COVID-19, if and when those funds should be needed. It will be drawn down when needed without further impacting the deficit. Second, $1 billion will be invested to continue programs that would otherwise expire and to fund programs still under negotiation. These measures will be announced by relevant line ministers in due course. Additionally, in a new initiative, I'm announcing today that we will invest $2.5 billion from the increase in coal royalties as a long-term asset to be held by the Consolidated Fund. The increase in coal price has been significant. However, Queensland Treasury expects that increase in coal prices to be temporary. Nevertheless, we expect the Commonwealth Grants Commission to penalise Queensland for these increased royalties in future years by reducing our share of GST revenue. That's why we are banking these royalties now, as a buffer against adverse GST changes and to continue to support future government infrastructure investment. These funds will be held in an account managed by the Queensland Investment Corporation in a similar way to the Defined Benefit Superannuation Fund. When they are not being drawn down, the earnings from this fund will help to reduce our net debt. In another new initiative, we are closing a land tax loophole currently being exploited by interstate property speculators. The land tax system in Queensland is one of the most generous in Australia. The family home is exempt, land tax rates are low, and the land tax threshold is higher than the median price of a parcel of land anywhere in Queensland. But some interstate investors deliberately hold multi-state property portfolios to avoid reaching the land tax threshold in any single state. This means Queenslanders with their entire land holding in this state end up paying more tax than interstate investors and speculators. It means young families in places like Logan, who I represent, and in Ipswich face unfair competition from southern state speculators who are flipping properties around the country at a furious rate. So we are closing this loophole by ensuring interstate investors start paying tax on Queensland land holdings once the total national value of their land holding exceeds our generous thresholds. Queenslanders who only hold land in Queensland will not be affected by this change. Queensland has come through the past 2 years in a better position than most of our peers. Our deficit this year is less than a tenth the size of the deficits in New South Wales and Victoria, and our debt is smaller too. General government sector net debt is forecast to reach $17.5 billion at the end of this financial year, $7.2 billion lower than forecast in June. This will be, based on their last budget, because we are still waiting for the numbers from New South Wales for their mid-year budget review, this will be $46 billion lower than New South Wales, where general government sector net debt will reach $63 billion. And Queensland net debt this year will also be $87 billion lower, not $8.7 billion, $87 billion lower than Victoria, where general government sector net debt will rise to $104.5 billion. I should also note that from next year's budget onwards, the government will be moving to reporting financial information in full compliance with the Uniform Presentation Framework, providing actual budget year and forward estimates for the general government sector. Actual and budget year reporting will be provided for the public non-financial corporation sector and the non-financial public sector, consistent with the approach used in the federal budget. Today's budget update is the printed proof of Queensland's strong and effective response to COVID-19. Queensland's economic output is expected to grow by 3.25% in 2021-22, faster than the 2.75% growth forecast at budget. Queensland's labour market is expected to remain strong over the coming years. Employment is forecast to grow by 4.5% in 2021-22, up from 3% forecast at budget. This will be the strongest employment growth in Queensland for 15 years. And household consumption in Queensland rebounded by 5.1% in 2020-2021, the highest growth in 13 years. On all the major economic indicators, economic growth, retail spending, household lending, dwelling investment, business investment, interstate migration and labour force participation, Queensland either is doing better than the national average or we are leading the country. Most importantly, we've led the nation's job recovery, bouncing back better than any other state, in fact better than every other state combined. While global economic turbulence remains, this budget update recommits us to sustained, responsible economic management and to building an economy that benefits all Queenslanders. Thanks for that. Happy to take questions.
Treasury noted the Omicron variant and its potential impact
No, we've developed the budget update with a number of assumptions around COVID. So we assume that any COVID outbreak will be largely contained thanks to high vaccination rates, and Queensland is continuing to get vaccinated and now getting the booster on top of that. We assume that the borders will remain open, no widespread lockdowns are enacted, and that the interstate border is assumed to remain open across the forecasting period, with the international border assumed to open gradually in 2022. So we've taken that into account, we worked through that, and we anticipate that our economy will stay open to other parts of the country.
Borders may remain open though, but if the general fear about it, it might stop people coming up here for a family holiday. Surely that's going to flow through the budget bottom line.
Well, I think we've had 28,000 vehicles cross the Queensland border every day since the border's open, and we've got 80 flights arriving each day. So I don't think that that's going to change in the future. I think Queenslanders are going to return, but more importantly, we're going to welcome visitors and tourists from other parts of the country, and that will continue in the future. You know, we have to deal with COVID now, and I think Queenslanders are up to that challenge. That's the point I made earlier. We've done everything we needed to do to keep ourselves safe to this point, and I think we'll continue to do that well into the future. And we've seen accelerated vaccination rates now with Queenslanders rolling up the sleeve, continuing to roll up the sleeve to get vaccinated.
Queensland's so far been protected from the trade tensions with China. It's pretty evident in the coal royalties. Do you expect that that will continue on, even if tensions continue to escalate? I mean, where are we exposed?
Well, we assume that Chinese restrictions will remain in place for the forecast period, but I think the good news is Queensland exporters have been able to find alternative markets, and so my advice is that up to 85% of coal volumes have found another home, principally Japan, India and South Korea. So while the price will moderate now, we've had record high prices, we're confident we can find markets for that.
Are you concerned though, as the Prime Minister, about the deteriorating relationship with China?
Well, we have a strong relationship with China as a state. I've met with the Consul General since my appointment as Trade Minister, and we're going to continue to foster fraternal trade relationships with China. We think that's important, but we're going to have to see what the future holds. And some of those levers, I think, as I said at budget earlier in the year in June, they are beyond our control as a state. They are the responsibility of the national government. So we'll see how that develops over time.
Treasurer, on the land tax amendments, how many people are roughly going to be affected by it, and won't the increase just be passed on to renters? Is that a concern?
We think there's up to 10,000 parcels of land that may be impacted by this, but to put that in context, there are 2 million parcels of land held in Queensland. So that is actually less than 1% of parcels of land in Queensland, and no, it will not be passed on to renters. The reality is rents are determined according to demand for rental properties. They are not affected by the amount of land tax paid by a small cohort of interstate landholders. In fact, many interstate property investors have done pretty well over the last 2 years because interest rates have dropped. So on our assessment, if you owned a parcel of land in Queensland, you owned a fully geared, median-priced investment property in Brisbane, you would be paying $5,000 a year less in interest today than you were 2 years ago. Now, interstate landlords have not passed that on. Rents have not decreased by $100 a week. They actually haven't decreased at all. Rents have been rising, and the costs for many interstate landowners have in fact been reduced over the last 2 years. So rents are rising because vacancy rates are low and landlords are charging according to the market. So there's more competition for rentals. That's driving up price. That will continue to happen no matter what happens with land tax. But we think it's fair enough. We think it's fair enough that families in Logan and Ipswich and in regional Queensland who are being squeezed by southern state speculators, we think they should be given a fair go, and because they're helping drive up property prices. And we think those people should be given a fair go, and those individuals should pay land tax in Queensland.
These papers predict that transfer duties will stay quite high, near to what they've been this year over the next couple years, does that mean no relief in sight from rising property prices?
No, I don't think so. I mean, our transfer duty rate here, or our transfer stamp duty system, is one of the lowest in the country. Our housing is more affordable compared to other states. Our rates are lower and concessions are more generous. In fact, we have, a Queenslander buying a home pays significantly lower duty on a median-priced home than almost any other place in Australia. So the pressure of stamp duty is not the thing that's driving increased property prices. We have a very, very competitive stamp duty regime in Queensland, and that's going to continue in the future. We're not seeking to change that.
But I guess the fact that that figure is going to stay quite high, doesn't that speak to the fact that you're expecting demand to stay really high and property demand to still be high, which means higher prices?
Yeah, look, I think that's demand's going to stay high because people are coming to Queensland. So we've got one of the highest, as you see here, one of the highest population growth rates in the country. In fact, I think in the federal government budget, mid-year budget review that's released today, we're responsible for 99.9% of population growth in the country. So there are a range of measures that are, or range of factors that are impacting on property prices. That's why we're looking to release more land through our growth area team, make sure planning approvals happen faster, so more people can get into the market and can buy a home. And we've seen record numbers of young families in particular get into the market. So that will continue in the future. We, of course, need help from the federal government, and that won't happen as long as we've got a federal government that wants to abolish the National Rental Affordability Scheme. So that's a decision of the Morrison government. That's not going to help with property prices in Queensland. That's going to harm renters who now have to go into the commercial market, a scheme that was subsidising rent. This is the first time in 50 years we have had a national government that is not helping with social and affordable housing. What this country needs is someone who grew up in social housing. This country needs Anthony Albanese as Prime Minister. That is a person who will help us fix the problem.
You're pocketing hundreds of millions of dollars out of transfer duty. You're benefiting from the housing boom, whereas your own forecasts are saying that inflation is going to outstrip wages growth. Do you feel at least a little bit bad for people who are doing it tough in these kind of housing affordability conditions?
No, not at all. I think our stamp duty rate, as I've said, our stamp duty regime is one of the lowest in the country. We've got one of the lowest tax burdens on taxpayers of any state taxpayer in the country. It is much cheaper to live in Queensland than almost any other place in the country. And we've kept that stable. The other thing we've done as a government, we made a clear promise to the people, no new or increased taxes. We made that clear. That's what we've done. We're closing a loophole today, which we think is an important step to take. But we are also, to be fair, Matt, the single biggest concentrated investment in public housing and social and affordable housing in our state's history. That's what I announced in the last budget, $2.9 billion to do our bit as a state, and we need other levels of government to assist us as well. So we know councils are focused on releasing more land and getting planning approvals through fast. We want to help them through our growth areas team led by the Deputy Premier. But we also need national leadership on this. This is not unique to Queensland. It's happening across the country.
General government royalty
I might-
freezes will end at the end of this financial year.
I'll come back to you.
So the coal royalty freeze is about to end at the end of this year. Do you expect to make a decision on whether to extend the freeze or hike the rate of royalties in the budget, or will we hear before that budget?
No, we've got no plans to change the royalty regime, and I've made that consistently clear to you.
The freeze will be extended?
No, we've got no plans to change the royalty regime, and I've made that clear.
The freeze comes to an end at the end of this financial year, so then it will just go back to how it will just increase.
We've got no plans to change anything.
General government expenses is $2.5 billion higher than the budget estimate. Are you comfortable with that figure?
Sorry?
Of the general government expenses?
Yeah. So there are a number of pressures that have come on the state, including additional infrastructure. We've announced our big program to build trains in Queensland. So those sorts of expenses have now been carried through, and there are some other matters that we've dealt with. We've allocated $1 billion to extend limited life programs. So they're programs that would otherwise conclude, but we think it's fair that they should continue. Some of those we're negotiating with other levels of governments. For example, there's the Queensland Water Regional Alliance, so we're working through that. So that's water infrastructure programs around Queensland. We've got a technical adjustment booked as expenses, such as in relation to the Queensland Superannuation Liability Scheme, and there's some of the expenses that we're now carrying forward to deal with.
Are you comfortable with the growing wages bill? It's gone up about $1 billion worth of reports compared to
We've made a commitment to fund the front line. That was a very clear decision we made in the election. We've booked that in our previous budget and in this budget. And to be fair, Damani, notwithstanding the increase in wages, the deficit's gone down. So we've made a significant improvement, notwithstanding the increase in wages, but we don't apologise for funding the front line. That's what we promised to do.
On funding the front line, though, given this, I guess, temporary spike in revenue, is now not the time that we should be investing more in problem areas for the government, if you will, ramping, hospital overcrowding, things like that?
Well, we've increased our budget for the health system by 13% over the last two budgets. We've now allocated $2 billion for any contingencies, any pressures that come through because of COVID. We don't know exactly what that may be. We can't predict that, but we're making prudent allowance for that without, of course, impacting on our bottom line. So it's important that we do move forward with fiscal repair. We're still targeting a surplus in 24-25. It isn't a mad rush to surplus, so we're not seeking to cut services or jobs or infrastructure. In fact, infrastructure investment is growing for those reasons I articulated, a number of initiatives. And we're not reducing staff in the public service in the sense of cutting the front line. We've still got our staffing freeze on. The non-front line still is held under 20,000. That's a promise I made when I became the Treasurer. That's still the case today. So the focus is on the front line. That's what we're doing. And we'll continue to make investments in health. I don't think anyone could reasonably criticise the Labor government for not putting money into health.
Just on health, in June, $339 million was allocated out of the hospital building fund. Has any more been allocated out of that over the boards?
I can't tell you at the moment. I'd have to check with the Health Ministry to see what they've done.
The land tax revenue is going up $89 million over the next year. How much of that is due to the changes that you announced today?
Oh, we haven't. Well, we have to get the legislation through the Parliament first, but we anticipate about $20 million a year will be received by the state from those changes.
When will the latest public service workforce report come out? When it comes out of the budget and it's done at
I think it will be released very soon.
today?
Yeah, I don't know. You'd have to ask the Public Service Commission. I don't release it, but it will happen.
There's a major change since June. Queensland's now going to host the Olympics and it's official. How does this update account for the spending that's going to be associated with that?
Well, our assumption around the Olympics is that the Olympics will be delivered according to the new norms. The financial commitment that was made by all levels of government was that it would cost $5 billion and that would be principally funded by a significant contribution by the IOC of about $1 billion, along with advertising and ticket revenue. So that's what we're working on. That's what I'm focused on delivering. Of course, there is infrastructure that will need to be delivered around that as well, and we're going to work through those issues going forward, particularly with our federal government partner, who've agreed to fund 50% of that with us. So we'll have to work out what the scope of that is.
Treasurer, we've obviously seen like a lot of the numbers have improved over the last year, I guess. We must be pleased about that. But, I mean, why should Queenslanders care about the surplus getting bigger, or, you know, we hear about all of this growth, they're still waiting longer for ambulances, or if they're finding it hard to get affordable housing and they can't meet the cost of living at the moment?
Well, when it comes to housing, I'll reiterate, we've made our single biggest investment, concentrated investment in public housing in history. I did that in June, and that's now being rolled out. I've announced a number of affordable housing initiatives, which we're rolling out as well. But I think Queenslanders...
That though, given we've got so many more people coming to Queensland to live, will you look at fast-tracking some of that? I think you were aiming for like 6,000 homes by 24-25. You look at expanding that, or fast-tracking some of that?
Well, I'm very confident that the Minister for Housing, Leanne Enoch, is doing a wonderful job to deliver that. Like that is what, I mean, you still have to build the homes, you still have to deliver that. But I think Queenslanders want us to restore the strength of our budget. Like, we are leading the nation in what we are doing, and you can't do all of the things we wish to do unless you can restore your fiscal strength. So other states are now drowning under debt. They are drowning under the burden of debt in New South Wales and Victoria because they couldn't control the virus. They had uncontrolled outbreaks, and so that was a catastrophic impact, as it now appears, on their economy, but worse, on their people. And so I think this is, as I said, this is the dividend going back to Queenslanders for their hard work. They want the budget to get back into balance. That's the first step. They want debt to be reduced, which is what we're doing, and they want the delivery of infrastructure, jobs and services. And we are leading on all of those fronts. We've got, a $50 billion infrastructure guarantee that we're delivering. We're delivering jobs at a record rate, leading the country. Now the lowest unemployment rate for almost 13 years. And we continue to fund the front line to deliver the services a growing state needs. So I'm very confident that we are heading in the right direction, that our fiscal settings are right, and that will continue to move forward in a positive way for Queensland. And I think that's very important to Queenslanders moving here, but also the 5 million people who live here.
But Treasurer, if we've got an extra $2.5 billion to spend on a long-term investment, shouldn't we be using some of that cash to fix the problems that are right in front of Queenslanders now, ramping hospital overcrowding?
Well, we've got to be prepared for what will happen when the royalties that we have received, the significant royalties windfall, are taken into account and our GST starts reducing in a couple of years' time. We have to be prudent about that. Otherwise, we'll be borrowing then to make up the difference. So my view is be prudent, use that windfall sensibly, put it aside so we can draw it down, particularly for infrastructure, to support, a growing state across the regions and across the southeast. So we've got that money set aside, and I think being prepared for the future is what COVID has taught us. We don't know what's around the corner. These are challenging times, but we need to be ready for that, and that's why setting that money aside. At the same time, we of course are paying down debt and we are reducing our deficits, and I think that's the balance that is right.
By the time 2032 comes around, do you think Queensland will still be affordable to live in, particularly the southeast?
Yes, I do.
Thank you, Rob.
Okay, that's great. Thanks everyone. Thanks for your time. Thanks for your interest.